All right. So you want to learn about the stock market, huh? Like its whole history and how it got so big and powerful? Well, we've got a stack of articles and even a video to help us unpack all this.
It really is fascinating to think about. The stock market isn't exactly brand new. It's been around for a lot longer than people think.
Oh, yeah?
Yeah. And its history has some surprising connections to how we invest today.
So there wasn't like some single aha moment. No one person we can thank for the idea of buying and selling stock.
Well, not exactly. Trying to pinpoint the one person who invented the stock market isn't so easy.
Yeah, that makes sense.
It's more like it evolved over time. Early forms of share trading were happening in different societies all over the place.
Interesting.
But there are some key moments we can look back on to see how this whole intricate system came together.
Okay, so let's talk about those early forms of trading then. One article mentioned these courtiers de change in France, way back in the 1100s. What were they doing?
So these guys were essentially debt managers for banks. They buy and sell agricultural debts. They acted as intermediaries. Kind of like the first brokers, really.
That's interesting.
Then we jump ahead to 13th century Venice.
Okay.
Merchants there were already trading government securities.
Whoa, bonds before the Renaissance.
Yeah.
That's a twist.
Right. I guess governments have always been in the business of raising money.
Yeah, I guess so.
And even the word bourse.
Bourse.
Yeah, which means stock exchange in a lot of languages, has a pretty cool backstory.
Okay, I'm listening.
It comes from a family inn in Bruges called Vanderbeurs.
An inn? Seriously, that's not exactly the Wall Street image we have today.
No, not quite. But back then, merchants would gather at this inn to trade.
Interesting.
And get this,
Yeah.
that practice actually spread, eventually leading to more, official exchanges.
Makes sense. Speaking of official exchanges, our sources point to the Dutch East India Company in 1602 as a really important moment.
Yeah.
Was this really the world's first publicly traded company?
Yeah, so the Dutch East India Company is widely seen as that, the first publicly traded company.
Right.
But there's some debate about whether an even earlier form might have existed.
Really?
Yeah, in ancient Rome.
Huh.
Cicero actually mentioned organizations that had these shares called parts.
Partes.
Yeah, it seems like they had a system of ownership and investment even back then.
So maybe the Romans were onto something even earlier.
Yeah.
But, okay, let's focus on the Dutch East India Company. Why was their approach so revolutionary? What did they do differently?
All right, so picture this. Early ship owners, they needed money, capital, for these risky voyages to the east.
I don't see that. Risky business.
Totally. So instead of taking on all the risk themselves, they divided ownership of the company into shares.
Right.
They sold those shares to investors who then shared both the risk and any potential profits.
Ah, I see. So it's like diversifying a portfolio, but on a huge scale.
Right.
And instead of investing in one ship, you're spreading your risk across the whole company.
Exactly. It was a game changer for raising money and managing risk. It really laid the groundwork for what we know as the stock market today.
So where was the first official stock exchange?
That popped up in Antwerp, Belgium around 1531.
Wow, interesting.
But before that,
What?
it seems innkeepers actually had quite a bit of control over securities and trades.
From inns to official exchanges, the stock market was definitely on the move. So what happened next?
Well, let's fast forward to 17th century England.
Okay.
Back then, there weren't any formal exchanges, so investors would gather.
Where?
In coffee shops. Yeah, they'd buy and sell stock in coffee shops.
Seriously, coffee, caffeine, and commerce. That's such a cool image. Those coffee shop debates must have been lively.
I bet they were. But as trading grew, in volume and complexity,
Yeah.
the need for dedicated spaces and clearer rules, well, it became pretty clear.
Yeah, that makes sense. So when did those dedicated spaces finally arrive?
Okay, so that brings us to two really important moments.
Yep.
In 1792, the New York Stock Exchange formed.
Ah, the NYSE.
Yep. It was formalized with the Buttonwood Agreement. They were getting serious about securities trading in the brand new United States.
Uh-huh.
Then, in 1801,
Yeah.
the London Stock Exchange was officially established. That solidified its role as, well, a global financial hub.
So those were the foundations of what we consider modern stock exchanges, right?
Exactly.
But I'm guessing there were some bumps along the way. Didn't those early markets have some pretty wild swings, maybe even some crashes?
Oh, you're absolutely right. Think about the South Sea bubble in 1720.
Uh-huh.
That whole event was pure frenzy. Speculation in companies like the South Sea Company and the Mississippi Company.
Crazy.
Investors were so desperate to get rich quick, they totally ignored the fundamentals, driving prices way too high.
And what happens when prices get that disconnected from reality?
Well, the bubble bursts. The South Sea Bubble and others throughout history, really, they remind us that irrational exuberance and just following the crowd can have devastating consequences.
Yeah, it's definitely a cautionary tale that's still relevant even today. So even with formal exchanges providing some structure, those human emotions like fear and greed were still shaping the stock market's path, huh?
Exactly. But even with all the ups and downs, the stock market kept going. It adapted, evolved, embraced new technologies, which leads us to the global financial force we see today.
Okay, so before we get into the modern era, I'm curious about those early companies. Why did they decide to go public in the first place? Like, what made them issue stocks?
At the very beginning, it was mainly about managing risk.
Okay.
Think back to that Dutch East India Company example.
Okay, yeah.
Financing those voyages to the East, that was crazy expensive and super risky. By offering shares, the ship owners could get capital from multiple investors, spread out the potential losses.
So instead of one person taking on the whole burden, they shared the risk and reward with many others.
Exactly. It was a brilliant way to deal with the risk in such uncertain times. As stock exchanges developed, going public gave companies even more advantages. Like what?
They could access way more capital to expand their operations, invest in new research, even cover their everyday expenses.
So it sounds like issuing stock was good for both companies and those early investors.
It was a win-win.
Companies could do more, be ambitious, and investors could potentially share in the profits. But how did this early system transform into the massive, interconnected stock market we see today?
Well, that's where things get even more interesting. We have to talk about technological advancements and the rise of some major players.
Ooh, okay, so stay tuned for part 2 of our deep dive.
Yeah, we'll explore how the stock market entered the modern era.
I'm definitely hooked. We'll be back soon to uncover more of this fascinating history.
Sounds good. Welcome back to our deep dive into the stock market. Last time we were talking about those early companies and how they discovered this whole idea of issuing shares.
Yeah, to raise capital, manage risk, all that.
Right. But how did we get from like coffee shops and handwritten ledgers to the massive electronic marketplace we have today? It's mind-boggling. Yeah, that's what I'm dying to know. Our sources mentioned a big player that really shook things up, the NASDAQ.
Ah, yes, the NASDAQ. It launched in 1971 and it was revolutionary.
How so?
Well, it was the world's very first electronic stock exchange.
Wow.
No more yelling across crowded trading floors, no frantic hand signals. With NASDAQ, orders were placed and executed electronically.
I see.
It made trading faster, way more efficient, and accessible to a lot more people.
So the NASDAQ basically brought the stock market into the digital age.
Exactly. It really paved the way for all those online brokerage platforms and mobile trading apps we use today.
Yeah, it's amazing how we can just invest with a few taps on our phones now.
Right. You didn't need a personal broker anymore to get involved. Anyone with a computer and internet could participate.
That's a huge change in accessibility.
Yeah.
What other big innovations or events shaped the stock market's journey into the modern era?
Well, globalization was a huge factor. As economies around the world became more interconnected, investors started looking beyond their own borders for new opportunities.
Right.
That led to new major players emerging, like the Shanghai Stock Exchange in 1990.
Ah, right.
China's economic power was growing, and their stock exchange reflected that.
Makes sense. And I remember reading about Euronext, a merger of the Amsterdam, Brussels, and Paris stock exchanges back in 2000.
Yep, that was a big one.
That was part of a wave of consolidation happening in the European market, right?
Absolutely. These new exchanges, along with the continued growth of established ones like the NYSE and London Stock Exchange, created a truly global network for buying and selling shares.
It's incredible to think about how many companies and industries are accessible to investors today.
It really is, from all corners of the world.
But all this technology and interconnectedness must have introduced some new challenges too, right?
You're definitely right about that.
Like what?
The speed and complexity of electronic trading brought new risks. One source even talked about the Black Monday crash in 1987.
Oh, we've heard of that.
It was a big one. Computerized trading basically amplified a massive wave of selling, leading to the biggest single-day percentage decline in stock market history.
So the technology that was supposed to make things more efficient actually contributed to instability.
In a way, yeah. Black Monday really exposed some vulnerabilities in the system, and it prompted the implementation of circuit breakers.
Circuit breakers.
Yeah, they're like emergency brakes for the market.
Oh, I see.
They halt trading during periods of extreme volatility.
So it's like a pause button to prevent a total meltdown.
Exactly. Gives investors a chance to breathe and figure out what's going on. It's one way regulators have tried to keep up with this rapidly changing market.
So it's like a constant balancing act between embracing new technology and making sure the market stays fair and stable.
Absolutely. And it's not just about the technology. Investor behavior still plays a massive role.
Speaking of which, our sources mentioned the dot-com bubble of the late 1990s.
Yes, the dot-com bubble, a classic example of irrational exuberance.
What happened there?
Well, everyone was excited about the internet and the potential of all these new tech companies.
Right.
Investors poured money into anything with .com at the end of its name. They often disregarded traditional ways of valuing companies.
So it was like the South Sea bubble all over again, just with a digital twist this time.
Exactly. And just like the South Sea bubble, it eventually burst, leaving a lot of people with huge losses.
Ouch.
It's a good reminder that fear and greed can still drive the market, even in the modern era.
Yeah, definitely a lesson worth remembering. But despite all the bubbles and crashes, the market has continued to grow and evolve. It seems like it's essential to the global economy today.
It absolutely is. The stock market isn't just about buying and selling shares anymore. It's a fundamental part of how we drive economic growth, foster innovation, and shape the world.
Okay, I'm ready to hear more about that. But before we jump into the stock market's impact on the world, I'm curious about something. We talked about how companies went public in the early days.
Yeah.
How is that different from the IPO process today?
That's a great question. Some things haven't changed, of course. Companies still go public to raise capital for expansion, research, and development, all that. But going public today is often seen as a sign of prestige and success.
Oh, interesting.
Yeah, it's like a seal of approval from the market.
I see.
It can boost a company's credibility, help them attract top talent, and even make it easier to acquire other businesses.
So the motivations are more complex and strategic now.
Right. And the actual process of going public today is way more complicated than just issuing shares to a few investors.
I bet.
It involves investment banks, underwriters, lawyers, a whole army of financial professionals.
From coffee houses to Wall Street, it's come a long way. But with all this complexity and the risks we've talked about, why do companies still choose to go public? And why should anyone even care about the stock market today?
That's where things get really interesting. We'll explore that in part 3 of our deep dive.
Okay, can't wait.
We'll delve into the stock market's impact on the global economy, its role in shaping innovation and technology, and why understanding this system is more important now than ever.
I'm ready for part 3. Let's find out why the stock market matters in today's world. We're back for the final part of our deep dive. We've gone through, the whole history of the stock market, from those early ways of trading shares to these massive global exchanges.
It's been quite a journey, hasn't it?
It has. But now, the big question. Why should anyone care about the stock market today? I mean, with all the risks and complicated stuff we've talked about.
It's a valid question, for sure. But here's the thing. The stock market, it's not just some abstract idea that only matters to Wall Street. It's actually woven into our everyday lives. It affects everything. The products we buy, the jobs we have.
Okay, so our sources mentioned raising capital. But how does that actually benefit people and the economy in a real, tangible way?
Well, think about all those incredible innovations we just take for granted these days.
Yeah.
Smartphones, life-saving medical treatments, even the internet itself. A lot of these things were only possible because companies were able to access capital through the stock market.
So when a company goes public, issues shares, they're not just getting rich themselves.
No, not just that. They're fueling innovation, progress that ends up benefiting everyone.
I see.
The stock market gives them this platform to raise tons of money, way more than they could get from regular bank loans. That cash lets them invest in research, hire talented people, bring new stuff to the market.
So it's like a cycle.
It is. Companies grow, they innovate, create jobs, boost the economy. And that leads to more investment opportunities for people, the potential to build wealth. You got it. And it's not just about fancy gadgets or medical breakthroughs. The stock market supports businesses of all shapes and sizes, from your local bakery to huge corporations.
Right.
By investing in the stock market, people are indirectly supporting those businesses, contributing to jobs, economic growth in their communities.
Oh, it's bigger than just making money.
Yeah, it's about taking part in a system that drives progress, prosperity. And there's another interesting side to it, too.
What's that?
The stock market acts as a kind of gauge
A gauge.
for the health of the overall economy.
Okay, I've heard that before, but how exactly does that work? How can the stock market reflect economic conditions?
Okay, well, picture this. When businesses are doing well, the economy is growing.
Yeah.
Companies tend to perform well too, their profits go up, stock prices rise. That positive feeling kind of spills over into the whole market. Investors feel confident, which leads to even more gains.
So a rising stock market could be a sign of good times ahead.
It can be, but it's not a foolproof predictor. The market can be influenced by so many things: political events, interest rate changes, even global pandemics or natural disasters.
Right.
That's why you got to stay informed. Don't just make decisions based on what the market's doing.
Yeah, good point. It's easy to forget that the stock market, with all its potential benefits, is still really complex and unpredictable. It's not some get-rich-quick scheme.
Absolutely. And that brings up another important point. The stock market gives people opportunities to build wealth, but there's always risk involved.
Of course.
Stock prices can go up and down like crazy. You could lose money.
So people need to be careful. Approach it with a level head.
Yeah. Knowledge is power, caution is key, and you need a long-term mindset.
What else?
Diversification is crucial. Don't put all your eggs in one basket.
Good advice.
And stay informed about the market and the companies you're investing in.
So it sounds like the stock market is powerful, but you have to respect it and be willing to learn.
Couldn't have said it better myself. Oh, and to answer your earlier question about the size of the world's stock market,
Yeah.
latest data puts global market capitalization at over $100 trillion.
Oh, I can't even wrap my head around that. That really puts things into perspective, the sheer scale of it all.
It does. And it shows the collective power of investment, the role the stock market plays in the global economy. We've really come full circle in this deep dive.
We have, from ancient forms of trading to this trillion-dollar global market. It's mind-blowing how much the stock market has changed and evolved.
And it's still evolving.
Oh, I'm sure.
With all the new technology like blockchain and decentralized finance, the way we invest and participate in the stock market is probably going to transform even more in the future.
It's a constantly changing landscape. You never really know what's next.
Exactly. It's been amazing exploring its past, present, and potential future. Hopefully this deep dive is giving you a better understanding of this complex, powerful force.
I know I've learned a ton. From its historical roots to how it impacts our lives every day, this has been an eye-opening deep dive for sure.
And remember, learning about finance and investing is a journey. Never stop being curious, stay informed, and as always, happy investing.
That's a great way to wrap things up. Thanks for joining us on this deep dive into the stock market. We'll be back soon with another fascinating topic, ready to explore new depths of knowledge and insight.